Welcome back to another episode of Leaders and Founders podcast. I am thrilled to be joined by Jason Oakley today, CEO of Afin Bank. Jason, welcome to the show.
Thank you so much. Delighted to be here.
Thank you. I could give an intro on you, but I think you will probably do yourself a bit more justice. So do you want to give a brief intro to yourself and your background?
Well, that's kind. I've been in the banking industry an awful long time. In fact, on the 1st of July, I celebrate my 40th anniversary.
I would never guess it.
Well, that's awfully kind. And that's allowed me exposure right across the full spectrum, all sorts of different interesting segments, be it private, be it personal, be it business, be it commercial. So most of my career, I've been essentially lending money to different counterparts, different entities. But I guess at very high level, I worked at the Royal Bank Group, made it into their executive at 33, and then led the SME franchise, the small and medium businesses across both the RBS and the NatWest brand, over 1 million customers for the UK. Then I went to Close Brothers, the merchant bank, and supported 3 acquisitions during that financial crisis period where people could scale up if they had a decent balance sheet. Then I founded and built Recognise Bank, which is an SME bank, a new bank from scratch. And latterly, I'm CEO of Afin, which is really targeting 3 very underserved markets: the African diaspora and diaspora markets generally, the high net worth market and the self-employed market. All 3 are very poorly served, and we're attracted to markets where we feel we can add value, and there's a level of intellectual investment required. It's not just vanilla, it's not just a hopper, it requires a relationship, some bespoke arrangement. So those are the markets we like to serve.
Awesome. There's a lot I'm keen to unpick there. I guess starting in the beginning, all throughout your career in a way, you've been in banking for quite a while. Mm-hmm. What are some of the biggest changes you've seen? Because you've obviously been through many financial crisis and...
Yeah, no, well, there's an awful lot of change. You know, if I go back to the early part of my career, firstly, I had to get permission from the bank to have a credit card. I wasn't allowed to have a credit card without approval from the bank. If I wanted a loan, I had to have the loan from the bank and get authorities from what was called advances department. If I wanted to progress in my career, I had to get my banking exams. So the standards and the expectations were so different. Obviously, the influence of technology has radically changed the way we distribute. Some very positive things, but also technology's driven, to my mind, a divergence away from relationship. It's now become very transactional. It's all about the law of large numbers. You know, if I can have 20 million customers on this platform, I can make X. I think throughout my career, I've been much more about customer relationship rather than portfolio relationship, a much more intimate approach. So we care more about the individuals rather than the aggregate mass. So there's so many changes in the industry. I think a lot of changes for the better. I think an awful lot, I might be described as grumpy old man syndrome, but things where I didn't think the standards and the career development paths are quite as good as they used to be. People aren't necessarily investing in professional qualifications the way they used to. One of the downsides of technology is people get streamed in narrow verticals, which means it's very difficult to have a diverse and broad career. I've been incredibly lucky because I've done so many different things. I just don't think that'd be possible now. If I went in with A levels or as a graduate, I'm going to be in a very narrow stream in a bank. So some really positive things, but also I think technology has made banking less intimate, less personal. more transactional. And so that's some of the things we're fighting in our proposition. It's to address some of those things and create more intimacy, create more relationship base, being able to speak to a human being that understands you and your circumstance, which is a much better service.
Yeah, I think it is lacking that relationship side. Everybody wants to do things on an app now, and some of the challenger banks don't even have physical places you can go or people you can speak to. Do you think some of these challenger banks are missing a trick by just focusing on customer numbers, how many users they've got, how many customers?
Well, the difficulty now, and we're subject to the same constraint, if I'm honest, is building a bricks and mortar network is incredibly expensive. And, for 3 years I worked at Metro Bank as the MD of commercial and mortgages. And we were building stores, not branches, but stores. Vernon Hill was very explicit about the name of the outlets. And I think my judgment now is that if you want to compete as a new entrant, you have to have low cost to income ratio. You have to be very efficient. And therefore, building a branch network is a big cost drag that would slow you down. So I think most new entrants now are digital. We're also digital. We won't have branches or stores, but what we will have is the ability for our customers to be able to connect by video, by email, directly by telephony. So there'll be touch points where people can speak. They can also build relationship. Obviously, take for example the mortgage process. You're going to go through an advised process there where people, particularly for people who are first-time buyers or a moving house, and it's not something people do that often. They need support, advice, they need help along that process. So we're building quite an intimate experience where people can get that support, and then across their journey, when they need help, through our app, for example, or through the website or through our telephony, they can get in contact and get help when they need it. So I do accept, I think it's a fair challenge that, are the digital banks offering as good a service? I think it is more difficult. I think from an efficiency perspective, none of us, including Afin, have got much choice on that because it's too expensive. And if you look at the big banks, all they're doing is closing the stores anyway, closing the branches. So they're looking to kind of strip that cost out. So, I think for me, the bit that's missing in banking and what we're looking to try to fill is what I call technology-enabled relationship. In other words, the technology's there and it's doing some of the drudgery. So you've got time to speak to the client, get to know them, understand their story, understand how you can help them, rather than technology just being a cost saving.
So not reliant on it, but actually using its benefits.
Exactly. It enables a richer relationship. So use technology. Wowzers, we've invested hugely in technology. Our platform is cutting edge. We use the same core platform as Chase Bank, which is owned by JP Morgan. So we've invested significantly in technology, but not for the sake of it, not for cost driven, but to kind of blend the synthesis between efficiency and creating time for our colleagues to have enriched relationships with our customers. And I think some of the other banks, in my judgment, it's all cost led. It's cost led change. And I didn't think, if I'm a customer, I don't know who I'd talk to. The question I'd always ask somebody is, so if you need something, who would you go to in your branch? Who would you go to in the bank? And invariably, most people don't have a name, don't have anybody, they don't know who to speak to. And that's the deficiency. And we want to address that.
It's awesome, because realistically, you don't have much choice now when you get in touch with most banks. You have to get in touch with them with the way that they allow you to, which often isn't great and doesn't have amazing touch points. So actually knowing somebody you can speak to,
well, huge. And I think it's as simple as, what experience would I want?
Yeah.
It's not complicated. It's like treat others the way you want to be treated. And like, if I had recently, sadly, I had an experience with my mum who's got dementia, where I had to get a power of attorney registered for her bank. and it was an absolute nightmare.
My dad recently went through the same thing. It's horrendous.
Absolute nightmare. And so, what we've got to remember in this industry is it's customer centric. We build value, we create success on the back of customers. So customers should be at the heart of everything we do. That's why we're there. And too many banks have forgotten that. Too many banks think that it's just about maximising profit. And a lot of people's bonuses are built on those sort of short-term metrics. And I think that's certainly a trend in the industry that's unhelpful.
That's an interesting point there. I think it would be tough to change potentially how those bonuses are paid out, but could you look at an alternative way? So looking whether it's customer retention or NPS, something like that.
Well, if the way Afin's set up, and it's similar to other banks I've worked in, is that we adopt a balanced scorecard, which is 4 quadrants. So the customer quadrant absolutely has NPS, has complaints and retention. You've got operations, the efficiency of the bank. You've got the finance, i.e. the performance, the profitability, the all of the financial metrics. So across, you're looking across, and then obviously colleagues is the last quadrant in terms of, growing your colleagues' capability, career development planning, supporting them on professional development, looking at their skills and competency reviews on how we can support them. So what you need is a balanced approach. Of course, performance is important, but I strongly believe it's derived from the right experience with your customers and the right experience with your colleagues. If you get those two right, the numbers look after themselves. If your lens is how do we improve the numbers, you trade off against those other areas. And for me, how the customer feels, there's no greater benefit for us than customer endorsement. People saying this is a great experience, you should go. And for example, in the very early days, Monzo had that.
Yep.
That's a great example of somebody that garnered that really well. To the extent that they do that now, it isn't the same now. It may be to function of scale, but you can build a really strong affirmation of service and the commitment to client, and that does have a big impact. So, that's what I'm looking for. But, I've got a balanced scorecard, but I'm, performance, if I don't perform, I no longer keep my job. I understand that. But for me, the way to perform is to get a great experience with clients and a fantastic colleague experience, because happy colleagues make happy customers. Happy customers give you great performance.
It's that circle of life.
Yeah. And too many people forget that. I think it's simple, but too many people are too short-term tactically focused on, I need to strip X £1,000 or X £100,000 out of this cost line or that cost line. Start with the customer and the colleagues, and you get better outcomes. And in fairness, across my career, I've had a lot of success. It has worked. It genuinely has.
It's awesome to hear. How hard is it to start and build a bank? Because this obviously isn't your first time.
No, it's. I did my MBA a few years ago now. I was in my kind of late 20s, and I had to do a 10,000 word dissertation at the end of the MBA process, and it took me a year and a half, partly because I was sidetracked on lots of things. If I think about the number of words that we have to write for a banking license application, you can times that by 20 or 30. It is a monolithically complicated process. Of course, that gets you to the point where the regulators are happy for you to start building new systems and processes. So I was incredibly proud of the team. From a standing start in December 23, we managed to get what was called authorisation with restriction, which meant that we got a banking licence, but we couldn't trade until we'd met other conditions. And we got that in October 24. So we did it in 22 months. And I see other applicants taking an awful lot longer than that, an awful lot longer, with significantly more resources. You know, we built that with 20 odd people. I think we sit at 30 now, so we're incredibly efficient, incredibly efficient. But the single biggest, there's so many challenges building a bank. Getting the culture right, thinking about the diversity, thinking about gender balance. You know, getting the culture is so important. But if I was to start with the most critical thing, it's capital certainty. So what happens is that people identify a niche or an opportunity, an area that's been underserved, as have we, and they'll raise some money. Invariably, the investment is not commensurate with the capital that's required for the journey. So you see people starting this process, but a good number of them don't make it to the license because they run out of money. Now, you know, I've been fortunate in that every bank I've been linked to, we've raised significant sums. Metro, in fairness, raised over £1 billion. It was a very substantial sum, not by me, of course, but by Vernon Hill, the founder of Metro. But then in Recognise, we raised over £100 million. In Afin, we've got a fantastic institutional shareholder called Wyker Re. Wyker is a West African reinsurer, incredibly successful. They made $40 million profit last year, and they are passionate about the African diaspora in the UK, which is the genesis of where we started. And it's also a useful diversification for them because reinsurance tends to be as a certain economic cycle to it, and banking tends to be a balancing item. It's nice and steady, you know, it's an annuity type income. You build the book, you build the value over time. So it's a kind of counterbalance. It kind of works quite well. But finding the capital and then that core nucleus, that initial team of probably 6 to 8 people are absolutely critical because they're the ones who are multi-skilled. You know, most of my executive, in fact, bar for one, have done the banking license before. So they've got that history. They know how resilient you need to be, the ups and downs of the journey. But I'd say if there's one thing more than anything, it's making sure you've got capital, because if you run out of money, the idea's gone.
And on that, having the capital, how important is it to pick the right people to work with? Because obviously you can take money, but it doesn't necessarily mean it's the right option.
Well, you know, in terms of through your journey, both in life and career-wise, you make mistakes and you learn from mistakes. I actually think adversity is one of the best indicators of someone's ability to perform, because if you can come through adversity, it's a great indicator that you've got resilience and staying power and to perform. But in the earlier part of my career, when in the early phase of starting new banks, any money was like good money, any money from anywhere. And I certainly have had experiences where we've taken money and there's a mismatch between the investor's expectations. The nature of banking is its patient capital. It's a slow and steady build. You know, it takes us, we've got a very efficient model, so we'll break even within 3 years. Most banks, it takes at least 5 years. And then you really aren't really creating significant enterprise value until maybe years 7 to 10. It's a slow process. It's not a quick book. So some investors think, oh, I'll put money in, I can flip it, but not with this journey. So finding the right investors. So what I call smart money, money that aligns to the journey. We're incredibly lucky with Wyker. Reinsurance is about patient capital. This is long term. These are big, you know, they take some of the insurance risk off insurers and hold it in their book. So those are long term. Some of those are multi-year kind of policies. So it's a perfect fit for us. I haven't always had that fit, and at the age I am now, one, I wouldn't start a journey unless I really like the shareholders and there's alignment culturally, and two, there's capital certainty. And in spades, I'm so pleased to say we've had that with Wyker. Wyker's a brilliant shareholder, and they're an incredibly supportive shareholder. So they are by far and away the best experience I've had in the industry, and I haven't always had good experience.
Oh, I'm glad to hear it's a good one this time. You mentioned there about what it needed to be for you to join a journey now. What made you choose Afin? What was it that caught your eye?
Well, I'm the sort of I'm definitely a build rather than run. I get bored. I love to build, and in fairness, yes, we've built 3 new banks. Although I can't in Metro, the license was already there. I built the book as opposed to, but the other 2 we've took them through the license process from scratch. But building it is very complex, quite stressful, and it requires a lot of diplomacy, planning, putting out fires, all sorts of different fires. Once you get into the early phase of a new bank is still very dynamic. The first maybe 3 years, because you're building it from scratch and you're still in that very dynamic phase. But you do eventually get to a point where it becomes a little bit more business as usual, and that's really the point that I start getting bored. So I love putting myself out of my comfort zone. I'm drawn to things that I feel like I need to understand. I'm just about to embark on an artificial intelligence course at London Business School because I know very little about AI, and I know it's going to affect my industry, and I know it's going to affect Afin, and I don't understand it properly, so I need to find out more. But the thing about it was called All Africa. We rebranded it Afin, but the thing about All Africa at the time was it was a segment I knew very little about. I could see. I went over to Ghana, to Accra, and to Freetown in Sierra Leone. Spent a couple of weeks, and engaging with a whole host of different counterparts. I could see a massive issue. It wasn't being served. Nobody cared enough. It was a complex onboarding process. It's perfect for what I like. I like to think, okay, how can we fix this? How can we do a better job? How can we apply technology? What can we do differently? And the African diaspora has the lowest home ownership in the UK. It's about 24%. There's over 1 million Africans renting in the UK. And if you compare that to, say, Anglo-Saxons, it's about 64%. If you compare it to the Sikh community, the Indian Sikh community, not all castes, but the Sikh community, their home ownership's 90%. So you're looking, what is it about the African diaspora that is so demonstrably weak or problematic compared to everybody else? And actually, when you look at diasporans, they come over here to earn a living. They're bachelors or masters educated. They're kind of committed. They're professionals committed to a career path. There's no, the Africans are a very significant proportion of non-white NHS workers. They are very prominent in all the big professions like the accountancy, legal professions, surveyors, other professionals. So they're very well educated. But like all diasporans, the banks have built their systems for 80% that don't touch the sides. I've got a UK passport. I'm on the elector's roll. I've got a utility bill. I can open an account in 3 minutes. But anything that's non-standard, the processes have never been built. Nobody really cared about them. So we see a really big opportunity. So I'm drawn to fixing challenges. I've been very lucky in the industry. I feel very, very lucky that I chose this industry, and it served me incredibly well. but there's still so much more we can do to improve the lot for customers.
And I guess for people who are listening, and I guess part of it might just be a personality trait, but obviously you enjoy taking on challenges and hard work. Some people can get a bit scared of big change and like you've gone in something you've never done before. What advice would you give to somebody if they were considering change but scared by it?
Well, I think the first thing is, there's a call to action. If there are various characteristics of people that typically succeed in my experience. Firstly and foremost, there's a passion. There has to be a fire in the belly. There has to be something that's motivating you, because believe me, in this journey you get knocked back. There's lots of problems and knockbacks and issues. So, passion is very closely aligned with resilience. So you need the fire and you need the self-confidence to keep coming back. I think the other two characteristics for me is the drive to constantly raise the bar. Never be satisfied, always find ways to improve things, which is linked to ambition, and then delivering on your promises, execution. So I would say, what have you done to check the idea? Have you really researched it? Do you really understand? Can you be passionate to present? Because obviously another issue is raising money. It's so incredibly difficult to raise money, find investors. So what are you doing, to present this in a way that stands out? Because there's so many pitch decks, you could barely keep count. So, any entrepreneur, I've got the greatest respect for entrepreneurs because it's a lonely and difficult path. And it's an uncertain path. You can put so much effort in, and at the end of it, you may not achieve what you hope to do. So the easy path is joining a blue chip and having a career. That is a much easier path. An entrepreneur, I think there's a kind of vocation, there's a calling that drives them to do it. It may be their desire to be their own boss, to create their own destiny. They may feel like this idea nobody's picked up, but there's 6 million SMEs out there trudging away, and actually they make up, more than all the big corporates in terms of value to the GDP. But they're so fragmented. Nobody has to a degree, you can say the Federation of Small Business or whatever, but they don't have a voice the way the CBI serves big business. So I'd say make sure you've got the finance, so that you can continue to pay your rent or survive. Have you satisfied yourself that the idea's there, and have you got the determination and the tenacity to stay the course, because you will have issues. I was recently at a panel at Bayes Business School about entrepreneurs, and there was about 140, and I must have spoken to 30 or 40 of them, and they were all incredibly passionate about this idea and how do I get investment, and we found this gap. One of them was a quant fund, somebody else had a Japanese proposition. A lot of them were technology-based plays, and there is a proliferation now. Everybody's got an AI business that they want to get investment for.
Maybe you could have one after your course.
Well, there you go. But it's have all the fundamentals in place, because the more you've got planned out and you've thought through and you've got the right financing, the more you can withstand unexpected challenges. If it's a bit flaky, you hit a problem. So most new SMEs, I think 70% fold within the first 3 years. So it's a big failure rate, and there's lots of reasons for that. You could have a brilliant business and suddenly COVID hit and you sunk, and that's not your fault or anything. Things can change constantly, but I would say, I admire greatly people that go on that path. It's not an easy path, and obviously if you find success, there's some fantastic success stories about there's my wife has an insurance broking business, and there was a lad 18 years old who was importing nets from India in his parents' garage and selling them to schools and different things. That business now is one of the top 250 fastest growing in the FT. He has done brilliantly, and he's done it all in 12 years end to end. And that is the best example I can think of somebody that's created fantastic value. But I could give you 100 values. It's a tough business, you know, it's not for the faint-hearted. So I would encourage you to do it because, you know, if you've got all the right dynamics, you could have great success. And I think the barriers to entry now are lower than they've ever been, particularly with technology. You can enter markets so much easier, but in part that means there's so many more trying to do it, which makes the chances of success much harder. But you know, I admire them, and I've invested in 25 of them. So a few of them that really catch my eye, I'll put a bit of money in.
And what does it take to catch your eye? What would you look for?
It's all about the people. It's all about the people. The model can change and pivot every 5 minutes. It's the people and their mastery of the detail, their ability to articulate, to inspire and create belief. You know, their passion and their, you know, there are people that leave an impression and others that don't. And, you know, and by the way, you know, I'm no oracle because, you know, we've had a reasonably high success rate relative to the average. I've done a lot better than 70% failure, but it's still probably, you know, half have succeeded, half have failed. But half succeeding is very good. You know, it's a good outcome for, you know. So, but whenever you're looking at a new business, 100% is the person.
Awesome. You've mentioned success a few times. What will that look like for you at Afin? What would you class it as, right? That's been a successful journey.
Well, there's a number of different things for me. Firstly, delivering on the promises I've made to my shareholders. Kofi Dufour is the group chairman, he's built incredible businesses. He's a fantastic entrepreneur, and I've got massive respect for him. And I feel serious obligation to him. I feel serious obligation to the Afin board, who put me in place. So I think delivering for our shareholders, but fundamentally for me, I know to do that, I need to create an environment where our colleagues are the best they can be, that we create the development opportunities for them, we create the stimulus and growth for them to get promoted, to build career development plans that really motivate them. And the greatest test of success for me, inevitably, this is my final CEO. I've been a CEO for 22 years. I won't be doing it after this one. This is my last one. So the biggest test and the mark of success is being able to create that top team and walk away from it and it not diminish in any way. So it's making yourself less important and them important. So one of the things I say is that as you mature, in my 30s, it was a me domain. It's all about me. The car, the house, the success, the salaries, the this, the that, the other. And as you're a younger person, it's about aspiring to be successful. You hit a tipping point where those material assets just don't matter anymore. You know, I can only eat off one plate at a time. I can only go on one holiday at a time. I can't spend what I've accumulated in this lifetime already. It doesn't really matter anymore. So what matters, what changes? Your mindset moves to us, i.e. the team and their development and their support, and creating something that you can feel really proud of and that you can walk away from and think, I helped to build that. That is making a real difference. That's success for me. You know, money's important when you don't have any. It becomes less important as you accumulate. It becomes less important. And for me now, it's lost its virtue. You know, don't get me wrong, I still want to be paid and I still want to enjoy the fruit.
Not doing charity work just yet.
I still want to enjoy the fruit, but it's not, you know, if you look at Maslow's hierarchy of needs, you know, I can certainly think back in my 30s where, you know, it was like a race to the top about the size of your house or which car you had and this, that, and the other. None of that's important anymore to me. It's about how can I support the colleagues? How can we create a business that we can all feel proud of? And actually, the ironic thing is that mind shift has led to more success, not less.
So would you change the approach that you had during your 30s where it was more focused on yourself? Or do you think that that led you to be able to be the person that you are now?
No, I think you're a function of the environment that you're in. So Royal Bank of Scotland was a small Scottish regional bank. I joined in 1988, and by 2005 we were the biggest balance sheet in the world. We had the most incredible journey over 17 years. It was an unbelievable journey. And, you know, the phrase in the Royal Bank was eat breakfast or be breakfast. And you had to perform. And Fred Goodwin, our CEO, cut the bottom 10% every year. It was an environment where you had to perform. And it was the most wonderful learning experience for me. And there were things about the culture that I didn't like that I haven't took with me, but there were learning opportunities and growth that I definitely have took with me, and that was the most wonderful learning opportunity for me. So I think most human beings behave the way that the culture and the organisation, the environment, they can be more kind of macho, more aggressive. They can be more collaborative, more supportive. Certainly, the culture I'm fostering is about collaboration. It's about supporting all our colleagues and getting the outcomes, but not you know, that person's a star, that person's a star. We as a team perform, and that has built more success. It genuinely has. It built more success in Metro. It built more success in Recognise. It's building more success in Afin. It works, and so you know, there's a really good book, Good to Great, and they do an empirical analysis of what makes a successful leader. And like when I talk empirical analysis, I'm talking about thousands, not like a small sample. And what that firmly established was the highest performing leaders, what they called level 5 leaders, basically were humble and were there for the team. It was not, you know, you do see some CEOs that are like real, you know, like look at Donald Trump or things like that, you know, that have an incredible ego. And like maybe he's successful, good luck to him. But the book proved, and it definitely feels right to me, that it's, you know, leadership is about empowering your team to be the best they can be. It's not about you, it's about them. And so that's a lesson, and it certainly helped me. That insight has helped me over the last few years.
Yeah, because I guess it's obviously changed a lot from the RBS days. You mentioned there were some good learnings there and things you can take forward. How do you think companies can have that high performing mentality and approach in a more modern day working environment where perhaps there's different requirements from teams, priorities have changed somewhat over the last few years? How can you drive that same performance?
Well, it's interesting because I think the younger generation, the millennial workforce, is incredibly discriminating. They care much more about what you do in terms of your behaviours than what you say. You know, they will they purpose is really important to a lot of younger people. You know, it's not just a job. It's a job that delivers X or Y. You know, something that I can get behind and feel passionate about. I think their sense of work-life balance is very different to previous generations about things like hybrid working and getting the mix of things right. So I think any leadership or the leadership team, the leaders, you have to adapt and you have to think through, okay, what can we do collectively to create success? You know, for me, I still feel very passionately that for the younger cohort, they need face time. They need time with people to learn. People learn in lots of different ways, but being involved in meetings and watching your boss, you learn. That's how I learned. And obviously, a lot more millennials now want to spend more time at home or working remotely. It's a mix because some people in a bed sit, they really don't want to. But if you're in a decent housing situation, you're quite happy to sit in your office and work remotely rather than commuting and this, that, and the other. So I think it's a tricky balancing act that we have to make. But for me, it's all about purpose, galvanising purpose, us all feeling that we're achieving it together, and having really rich conversations about career development. Where do you sit in this organisation? What's your aspirations to grow? How can we take your career, and what are the building blocks? Because then people feel there's a greater incentive to invest more. So, my older cohort are relatively easy to work with compared to my younger cohort. So we did an exercise. We've just moved to 10 Chiswell Street, which is our new head office near Moorgate. And I created a property steering group, and I deliberately chose the younger people, partly to get to know them more, to connect with them, and I spend more time with them on a project, but partly because I knew their requirements were far more discriminating than some of my older cohort around collaborative space, sound-free boxes, spaces to do this, spaces to do that. The ability, we need fruit, we need sparkling water, we need filtered water, we need a hot tap, we need this, and that was really helpful because I wanted to engage them because I want them in the office more. So I've got to accommodate, I can't just ignore what they need. So it was a good lesson for me because my generation, it's like, well, you just get a desk. What more do you want? What do you expect?
You got a chair, be happy.
But I'm exaggerating, but it's not a million miles away from the truth. But equally they bring, diversity so important. It's not just gender diversity, which is really important. And my senior leadership team, it's pretty well split 50-50, which is less typical for a bank. It tends to be male oriented.
Do you think it's important to get that early on?
It's critical. It's critical, but not just female diversity, which is really important because my female leaders are incredibly dexterous. They have to multitask all the time. They are far more adept at managing multiple objectives and having spinning plates all over the place. So that kind of thinking is useful. But also, I'm serving a diaspora. So 40% of my colleagues are African, which also brings an incredible richness. I call it a superpower because we've got all this thinking and diversity, and we try to harness all of it. And it makes us, it's nobody, I don't believe, has that combination of input, and it makes it really helpful for us. And so, not all things, a lot of my younger colleagues are always a bit out of touch, this is how things are changing, most people spend 4 days at home and I'm thinking, well, but I care about your career, so I'm going to intervene a bit, and I know you don't like it, but I'm still going to do it. But also the diversity, the richness, the kind of, the quality of the thinking, it's so much greater that it's such a benefit.
Awesome. Two points to finish on. First, what's a mistake you've made in your career, one of the biggest potentially that you're happy to share, and what did it teach you?
Yeah. I've made a lot of mistakes, So there's a very long list. I think I'll give you a different one because we've already spoke about it. The single biggest mistake was not being discerning enough about where capital comes from, and I've learned from that. I don't make that mistake again. In my career, I've had the most wonderful opportunity, and I've never been frightened. So in the early part of my career, which was normal with the Royal Bank Group, I moved house 10 times in about 12 years. So I was constantly moving all over the UK. And my eldest son, who's now 29, was just about to go to secondary school. And I'd been asked to go in as CEO for a business called Hanco, which was an ITM business that was seriously underperforming and was on the group board. I.e., Fred Goodwin was looking at this every month. So Gordon Pell, who was the deputy CEO, said, go in and fix this, in the good RBS way, go and fix it, which we did. So 18 months later, it was off the group board, profits had been restored, performance was good, and I got patted on the back and said, well done, Jason. Now, we've lined up for you to go to China because we're doing a joint venture with the Bank of China. And I said, oh, Gordon, my son is just about to go to secondary school. This will be really disruptive. I don't think I can. I'll talk to my wife, Claire, but it's just too disruptive for us. So anyway, the broad conclusion was that it wasn't the right time. And he said, "Oh, well, don't worry. It's disappointing because we thought you were the right guy to help run this, but we'll go and find you some other job." And HR came back and said, "Oh, we think there's a great opportunity in Citizens Bank, which we owned in the US, headquartered near Harvard." And I said, "Well, again, this is fantastic, thank you, but better than China in some respects, less of a cultural shift, but my lad's doing his, and ultimately the feedback came back to say, well, Jason, we've offered you 2 jobs now. You've done a great job. And by the way, I'd been there for 18 years and had a great time. It was 8.5 years. It was a great time. And I was in a dilemma about, do I stay or do I go? And I felt like I'd achieved an awful lot and I put so much effort in to get these results and to turn that business around. And I felt really quite let down. I suppose, is it a mistake or is it a reflection that I decided at that point to engineer my exit, to go? And I do now look, well, I was head of business banking, and my oppo, head of business marketing, was a guy called Paul Thwaite. And Paul's now CEO of the group. And so there's a tinge of regret thinking, well, what might have happened? I'd been building up, but I chose to go and I went on a different path. Now, in all honesty, what I didn't see coming, I left in February 07. And in August 07, the world went crazy. And all Royal Bank has done for 15 years is cost cut and diminish and diminish and diminish. But I loved that business and I loved the team there, and I certainly had more than a fair share of pangs of, was this the right thing? Wasn't it the right thing? I did it because it felt the right thing to do at the time, and I probably haven't regretted it in truth. You just occasionally think, well, what might have been, what might have happened, but the pathway I've had, I've been very happy with.
Good. And finally, what are you proudest of throughout your career?
Definitely the team and the people. I try to, each time we set up a new bank, I had a couple of colleagues who were just so fantastic from Recognise. Patrick Ferguson, who's our Chief Risk Officer, and Monica Velasquez, who's our Chief Technology Officer. But I, as a general principle, build a new team each time. And if you look back and you think about what you're proud of, it always is about your colleagues and what you've achieved together. And those are the only things. It's interesting, with your family when you meet at Christmas or Easter or whatever it is. What do you end up talking about? The memories. When Mum fell over on the beach, or when she kind of fell off the donkey, or whatever it might be, and everybody's laughing and joking. Oh yeah, I couldn't believe that. It was so funny. The memories are everything, and I think in work context it's the same. It's it's the relationships you build with people and what you achieve together, and that's always what you feel most proud about.
I think that is a very good way to end. That was amazing. Thank you very much, Jason. Really appreciated having you on. It's been a great conversation.
Excellent. Well, it's been a real pleasure. Thank you.